Welcome, lucky listeners, to episode 72 of the Realtors Podcast with the CEO, Tony Arnerich, and the co-chief investment officer, Brian Shipley of Arnerich Massena. Gentlemen, before we get started, I'd like to read off a sponsored message, and that also comes from Arnerich Massena, an independent investment advisory firm serving individuals and families, foundations and endowments, and corporate clients across the United States. With an emphasis on impact investing and specialization in private markets, the firm has become known for its forward-looking, world-class research and investment opportunities. You can visit them online at www.am-a.com to learn more about their investment approach and read the company's recent white paper, Impact Investing. Why, what, how? Again, folks, that's am-a.com. You can go on there and start investing in impact today. Tony, thanks for coming on the show.
You bet, you bet.
Who is Arnerich Massena?
What is Arnerich Massena?
What is Arnerich Massena?
Whom Arnerich Massena? It's a 55 people strong investment advisory business in Portland, Oregon that has harnessed a lot of collective energy, client-centric, and as investment professionals, we have the ability to look forward. And as Brian and I looked forward, looked at data, we came up with impact investing. So we've been able to achieve a reasonable size in the marketplace by advising about $11 billion. And we've been involved in building portfolios for over 30 years. So taking that experience and moving it forward to the next generation or into what our topic today is, impact investing, was sort of a natural for us.
So when you start trying to tell people impact investing is going to give you the same returns investing in companies like traditional companies, what was the reaction from people? And walk me through how it's changed in the last couple of years.
Well, gosh, I think the industry probably shot itself in the foot and the head in the beginning because they used language that connoted philanthropy. And as a fiduciary, and to be honest, older white males control most of the money in America. It was very difficult for them to get past both the concept and the fact that it was philanthropy first and not investing first. And so either from a fiduciary veil or just from a practical veil, it was a barrier. And then the language didn't help. You know, socially responsible, green, ESG, acronyms that, you need an advisor to figure out, right? So we got to make this simple and easy for everyone to understand. And that was the challenge that Brian and I took on probably over a decade ago.
Our first foray was really kind of in the mid-2000s when equity markets were really robust. This was right before the global financial crisis, and there wasn't a lot of product for our clients to invest in. In fact, we actually had to go over to Europe to find what was really kind of the godfather of investing from an ESG standpoint. And when I say ESG, it's environmental, social, and governance. So companies that are looking through a different lens from a risk perspective on how challenges with sourcing raw materials for the goods that they produce, their impact on the environment for the waste products that go into it, how are they treating their customers and their stakeholders from a social standpoint. There wasn't a whole lot of discussion around that, but we found a fantastic group in Europe in the mid-2000s that really didn't have a presence here in the US, so we actually had to kind of create investment products for our clients to be able to invest in this space. And that goes back over 10 years now, which is amazing to think about.
So the great thing for us about this whole concept and challenge of language, is this philanthropy or investing, and are you giving up return? And so we had Brian and I, with a few other leaders in the space 10 or 12 years ago, went and talked to maybe over 1,000 people, and we were reasonably entertaining, but no one called us back. And Brian and I looked at each other and we looked at the data and we said, I think we're onto something. I think there is a theme here. I don't know where it's going to go, but let's go. So let's start funding. Let's go use our incredible analytical skills and history and experience to go sort out the nuggets in the industry that are doing something meaningful in sustainability, in socially responsible, in green, in pink, in yellow. But we went out and found them, and then we funded them. We seeded them.
And what year is this?
That would have been 2008, even 2007, 2008.
2008, 2007.
Pre-crisis. definitely kind of early days. And Arnerich is in a really unique position because we actually cater to a really broad array of client types. So we work with families and individuals. We work with a lot of institutions, both endowment foundations and corporate plans. And so it really kind of gives us a unique perspective to kind of see what people are thinking about across the entire spectrum of both institutional and more wealth management type clients. And we got a really good view of the industry, and there just wasn't a lot out there. There's a lot of talk, and so this was during a period where, again, equity markets were really robust. People were feeling good about their portfolio account balances, so they're willing to consider at least talk about new things. But like Tony said, there just wasn't much movement from an actual deployment standpoint. It actually is rhyming a lot with what we're seeing in the market today. Again, equity markets here over the last 10 years have been really, really strong. People are thinking about new ways to deploy capital. The great thing about today relative to the past is the marketplace has just grown up so much. There's more vehicles for clients to invest in who have an interest in this space. There's definitely more understanding of what ESG is versus impact, and a lot of this language barriers that, it was more education for us a decade ago, where today it's a more real conversation about how do I go about deploying this and really kind of hitting the mark on what I want to accomplish from an impact standpoint. That's really how the world has changed over the last decade.
And we evolved with it.
Yeah.
We were sort of dreamy-eyed, I think, when we started, passionate. But then we began doing the work, and we have such incredible clients here. They let us freelance on them. And so we were able to make investments and continue to define our strategy and our investments, and we were able to measure them. And so we knew what we were doing in the space was performing at or better than traditional indices. So we got our own, we proved to ourselves, I think, was the first thing. And that was a decade-long proof statement. And then a year ago, we said, okay, we are ready. Mitch, Brian, team, go to work. We are going to roll out a full impact, to the greatest ability possible, a full impact portfolio. And an impact portfolio for us incorporates environmental, social, and governance concepts. We feel highly confident that we can build a portfolio that really is probably 75 to 80% oriented towards what I call the common good.
Right.
And if I could just interject real quickly, Tony says, our clients let us kind of freelance with their capital. I don't know if I'd go that far. I think we've earned our clients' trust over the nearly 3 decades that this company has been in business. So whether it's impact or hedge funds and private equities in the 1990s, looking at emerging and frontier markets before that became in vogue in the 2000s, the way we go about looking at our investment managers that we want to work with in the future, we tend to be willing to look forward. That a lot of this industry just doesn't have the I don't know if it's courage or what, to look forward and see what a different outcome might be. And I think over the years since Tony founded the firm, we've earned a tremendous amount of trust with our clients to look forward and take advantage of these opportunities before they become mainstream. Because when they become mainstream, a lot of the opportunity is kind of taken out of the opportunity set.
And if I may, I just want to say I can really respect what you all are doing and starting 10 years ago and going into something into the unknown and not getting those calls back. Very similar to a lot of the guests we've had on the show. And I feel like we've been throwing around this term impact a lot, but for our listeners, I feel like a lot of the challenges that I'm sure a lot of your clients or potential clients have had is understanding what impact means. Yeah. And I can relate to you because when I came in, it was doing well by doing good.
Right.
Okay, well, doesn't the dentist do well by doing good?
Right.
Why wouldn't you invest in health? What's the difference between impact? So, Tony, I want to ask you, how would you define impact?
Well, we took a really simple definition, the Brundtland Commission report, that basically said we want to leave the world in as good or better place than when we came. Mm-hmm. So it was intentional to making a difference. And that to me is impact. Now, how it relates in an investment portfolio, that when you do this and when you look at ESG, right, this acronym, well, really, all people who manage money should be aware of their environmental impact. They should have excellent governance, and they should be socially conscious and aware. So the ESG application really is just good management. Unfortunately, we've sort of needed to put names around it, but when you go to impact, when you invest in a company that produces water from air, from the humidity in the air, and you bring water to places where people don't have water, you don't have to argue the impact. So what we wanted to do was to make everything we did pretty obvious, especially in the private equity arena. If you invest in a company that makes a new drug and it saves people's lives, no one's going to argue impact. But what the industry got into, I think, was just try to definition. And I'll be really honest, most of the world in investing drives the bus looking through the rear view mirror. Very few people would let their child get on a school bus if that's how the driver acted. So if you look through the windshield, there was nothing for those who look backward to analyze. There wasn't 25 money managers that they could go out and sort. There was one or two, and then you had to have confidence in your analytical skills and experience to be able to take that leap. So for us, the leap wasn't charismatic, it was sequential, and we just kept at it.
And I like what you said about management. So Brian, I want to ask you, you can't manage what you can't measure. How do you measure impact?
Yeah, that's the real challenge today. But again, I kind of look back at where we were 10 years ago, where we are today. The UN, the SDGs that you're familiar with, you're wearing the pin today, which is fantastic. That is one avenue to measure impact in these portfolios. And really that's the holy grail. When we think about our endowment foundation clients, they want something above and beyond just the investment results, but how are they truly having an impact in their communities or in the world? And so one thing that we've seen the world kind of moving to in a very consistent way is tying company revenues. If it's a public equity portfolio, there are sources now where you can actually look at how that company generates its revenues and tie them directly to SDGs. So that's one way to do it. Another space that we've had a real strong interest in is private real estate. That was a very simplistic way to think about how impact can really move the needle. If you're willing to commit a little bit of capital to do some enhancements to the building to improve its heating and cooling spend, how it recycles water from the roof, those are all things that you can tangibly measure. That have a really profound impact, and these are long-term themes that, again, if you look just a little bit further out than next quarter or next year and are willing to put a little bit of capital into a project with a longer-term vision, you can provide some really compelling economic outcomes.
Community building. It's community building.
Yeah.
When you take up a building and you enhance it at that level, you attract a kind of personality. You're off the grid potentially. You're less energy, and that's where the world is going. This is the way that we can accelerate that directionality of community, because that's another area that is more and more difficult to get in our technologically driven world. So an apartment complex that has living, exercise, ability to discuss areas of commonality, that kind of stuff. So not only a real estate play, but a community play as well as lessening our impact on Mother Nature.
So would you be able to walk me through what's a company that comes to your mind? You were mentioning a few earlier.
Right.
What's a company that comes to mind, and how do you work with them? And can you explain the type of business that they run?
Do you want to take that on?
Sure. This is mostly evidenced in the private equity or venture capital arena, which is really the most vibrant area, I think, of investment opportunity today, because this is American know-how, technology, and venture capital converging to make change. And if we can get critical mass, it'll be pretty exciting. So things that we look for example, water. In the West, unbelievably, west of the Mississippi, you and I, companies, farmers, can own water. East of the Mississippi, we can't. We're in a really quirk of law, and as you know, we are water-stressed areas in the West. Well, you can actually do the most incredible things with a water-rich farm. You can take that farm, very simple, it's a farm, it's just growing stuff, it's not, it's hard work, etc. You can turn that farm organic. You can take and use half the amount of water by investing in high-tech irrigation techniques, and then you can sell some of the water. And you can take an investment that is turning its crop organic, it's using less water, and it's monetizing its water right so that the investment actually is a better investment than the average farm investment. Now that takes know-how, and that's this whole concept of going out and finding the managers who we fund. And today, I think our clients own about 30,000 acres of farmland that's going through this change.
What are some of the trends, Brian, that you're seeing in the field of work that you're doing?
Yeah, I think there's just more awareness around this. So there's companies that are actually measuring companies, and we're kind of taking this to a higher level than looking at farmlands or companies that are directly tied to sustainability, where they're coming up with a product or solution that is tied to changing the world. But even companies like in our own backyard, like a Nike, if you rewind the clock 15, 20 years ago, they got into some hot water from a press standpoint and a shareholder standpoint, where there was concerns over their child labor practices in Asia. There was concerns about how they were sourcing their raw materials. So right. Nike was kind of one of the first movers in this space to really recognize that there was some risk long-term to their business, and they needed to rethink how they went about thinking about their supply chain and how they were moving raw materials to an end product and how that affected their employment base. So Nike was, again, one of the first movers in that space. They established a sustainability group. They spent a lot of time on kind of design and innovation, and one output of that is the fly knit material that they use now. That's less material, lighter weight, so better performance for the athletes that are wearing their products. That's an example of a company that you wouldn't think of Nike as a sustainability oriented company, but everybody is aware of this today, that they need to be thinking about it. They need to be talking about it. And even in just kind of traditional meetings that we have with long-only equity managers who may or may not kind of wave that sustainability or impact flag, this concept of ESG and how they're incorporating it into their investment process, it comes up in nearly every conversation. It's really amazing how much that has changed over the last 10 years. And I think it's moving the needle, exactly what you're talking about, where companies are just more aware of it and recognize they need to do something about it.
And Tony, you feel like these companies that Brian's talking about, they're making these changes because of social pressure, or it will, in the long term, increase profitability, or both?
I'd like to think both, but I'll take one or the other.
Yeah.
I'm kind of at the results-oriented part of my career. In the case of Nike, which we know really well, they led it, and then they went quiet because it was a competitive advantage.
Right. That's right.
And now they're coming back out with it because it's a little more mainstream. Yeah. So it went to the heart of what we believe this is. It's about economics. And if you can hook the economics to the intent, now you got a winner. And Nike's a winner in this particular genre, and a leader. And we're really proud to have it in our backyard. We've been managing the Nike retirement plan for 35 years. So it's like a wonderful combination that we've been able to watch their growth and be part of that. They spoke at some of our conferences, so we're really aware. So that would be a real big public company statement. And then you move all the way down to the venture capital startups and all the different opportunities that we see going on in this new economy, which is really tech-based. But I think for us, investing in what the world needed was something that the client could hook onto. So if the genre was sketchy and hazy and allowed people not to focus, then it was harder to argue that what we wanted to do was to invest in what the world needed. And we're not saying that we need or are making any judgment on anything else, but that to us was tactile. That was us to our customers. We could really do it. And so what you end up doing as investors is you build diversified portfolios, and the way you outperform is where you make your tilts. So if you have, as an investment professional, the things that you want to your back is wind. You don't want to sail the boat, into the wind. And so we think those themes, we could articulate water and scarcity and need, food with McKinsey and scarcity and need, energy, because if we don't decarbonize, the risks are too grave. And then healthcare, which needs to be invested in for both better outcomes, but saving the system money and allowing the system to self-correct, which has gotten completely out of whack.
And Brian, we've talked a lot about the E of the ESG, the environment. What about the S? I heard the S is referred to as like the messy middle.
Right.
What do you look for in a company, or what do you tell your investors about the S.
Well,
of the
so
company?
S being the social component, and that's not just necessarily your communities, it's your stakeholders. It's the employees that work at these companies, it's the customers. It's a really critical piece of all of this, and I love that we've kind of tied this back together. So when we talk about impact and we talk about ESG in particular, internally we really kind of consider that impact 1.0. And that's an important piece of client portfolios. But what Tony's talking about with these themes around water and energy and healthcare and food, from our standpoint, that's really impact 2.0, which still entails ES and G, but it's really the segment of the market that we think is going to drive the outperformance in our client portfolios. It's going to have these secular tailwinds that we think are going to be really powerful for companies that are just in the path of that growth and the path of that capital spend. And so I still think social and environmental and governance all play a critical role in that. It's just diving into that space a little bit more, and that's really where I think we're going to see our value creation come from.
And I think the social drives really the whole thing, because it's the people quotient. And it's the people who drive all this stuff. You'd like to think that, maybe it's some great idea, but it's the people, that social part. And I think that if you're, as a company, if you're adding value in your community, in your shareholder group, in your board, in your stakeholders, and you're always adding value down the chain, though, that's really the essence of socially responsible investing, is adding value to your constituency. And we have to redefine it, I think.
Yeah, and this is an interesting point in time, right? Because all the things that we're talking about require a long-term perspective to actually move the needle. Whereas today, where kind of the public equity market has gone, so much is focused on just short-term results. The managers that we've seen kind of perform the best and also have some of the strongest ESG scores are those with a very long-term perspective. They're looking for management teams that are looking out beyond the next quarter or the next year, and understanding that the decisions that they're making today is really going to drive, if we look at S just specifically, it's the stakeholders of the employees of the company and keeping them happy and having that resonate with their ultimate clients. They're focused on those kind of things, and they're willing to kind of forego short-term results to build a really powerful platform for really future growth and sustainability.
And what are some S and G, being governance, principles that Arnerich Massena has incorporated in their own company that's resulted in prosperous growth?
Well, environmentally, that one you just make as low a carbon impact as you can. We require a team concept, so we have a central office and where we work from. On the social side, what we have decided that for our impact to our community, we would adopt a local school, and we have this incredible 25-year partnership with the local elementary school that warms your heart. Probably the best thing Arnerich Massena does is the I Am Learning program, and for me, the social part is in the giving. And so if you're fortunate enough to be gifted the opportunity to do community service on company time, and you have the pleasure of having a young 5-year-old, 6-year-old from Honduras who's come through god-awful things, who doesn't speak English, and you get them to read by just about this time you come to work with your buttons popping off, because that's the social part. So we try to live it, and because we all work in this program. And the governance is, man, you do the right thing, you don't have to worry about the governance. It takes care of itself. And we're a corporation, we do all the things. We are going to embark upon being a B Corp. When I started, there were no B Corps, but we are going to embark upon the very positive process of differentiating ourselves, more pointedly to the genre that I think we belong. So I think we are a perfect B Corp. Yeah. So we try to do it, through our, I think we do it through our people. I mean, you don't have people that work for us for 20, 30 years because you're not socially hip, right? But I'm an old guy, right? I mean, I'm not socially hip.
And one thing I want to really point to is, we work in the investment industry, which historically has been very male dominated. If you look at our practice, Tony doesn't even think about this because it's just so ingrained in his mindset and the nature of this firm. But the two managing directors of both our institutional and our wealth management practice are females. Our board has a tremendous amount of female influence in terms of the direction of this company, and the leadership team has a tremendous amount of women who have a seat at the table, have a voice in the future of this company. It's a really key component
And this was
how we're structured.
And it's been that way from the beginning, because it was started by my wife and I, so it's sort of a 50-50 deal. And now, diversity is such a crazy word. I don't really know how to say it, but it takes all kinds to make the world go round. And why not be inclusive of all kinds, men, women, color, old, young. I really find it incredibly how wasteful we are to all the experiences of the old as they waste away without family. But here, we've just been really fortunate to build around really environment, around social things, around people.
Yeah.
Because we hire people to run our portfolios. And on the private equity side, we hire people to run our companies. And if you get the people part right, and you start to align your interests, your interests, you can make magic. I mean, we can prove to you that, that you can outperform, that you can have your cake and eat it too, I think.
And I'll just add to that. I mean, I wouldn't say by law, but we have to have 50% representation from both genders in our magazine. And it's benefited us because we actually have a higher female reading base and subscriber base.
They're just, Brian and I have been together for so long, and we've been doing this, that we're probably the appropriate pair here.
Right.
But our ownership is more than 50% women, and our of the five senior jobs, 3 of them are held by women, and 2 of them are held by these 2 characters you're looking at. It's really exciting. I mean, just think about it. You can take an idea, you can invest time, money, and effort, research, and then roll out something pridefully with confidence to perform, and it'll last, right? Because it makes really good common sense. And I don't know why. Maybe it's Portland, maybe it's the water that we do this, but I think the thing that we said that is most operative is that we drive our bus looking through the windshield.
And it's crazy, females represent 12% of the board seats in America. I can't wait until the day it's 50%. And what that will do for our country and our government and everything else. But okay, we touched on the E, we touched on the S, we touched on the G. The next question I have for you, Brian, is what's the biggest misconception that people have about impact investing in their return on investment?
Yeah, I think this is one thing that the marketplace hasn't given up, and that's that it has to be concessionary, right? That to do these good things, that you have to accept a below market return. And I think what we've demonstrated in our client portfolios, and just how much the market has moved to gaining more acceptance, there's more product out there. We talked about this institutional mindset and needing to look at a historical track record to gain the confidence to deploy capital in this space. These strategies have started proving themselves out, that you do not have to sacrifice returns to invest in a meaningful and impactful way.
I like that a lot. And now I want to focus on leadership. You mentioned management, you mentioned leadership too. What are some qualities that you're looking for in a board or in the actual entrepreneur themselves? Tony, you want to take this one?
Sure. I'm really pretty simple. Do they got the DNA? Do they have true grit, and can they change?
Okay.
And if you put those 3 together and you look for that and you're relentless, I get to wear 2 hats, I'm fortunate. I'm not 2-headed yet, but maybe. That in our private equity arm, we're highly convicted that it's the leadership team that makes the difference. There's a lot of great technologies, there's a lot of really good ideas, but it's really the people and the team. And so I think if we had a skill set, it's that we can hang out with good people and we can sort them out. And then you have to kind of be relentless. I don't think it's any different on the fund side either. If you sit in a room with all the people who manage our money, you can hang out with them, you can have dinner with them. They are real people who are really passionate and good at what they do. So I think maybe if there is a skill, it's a people skill,
really
and it's a passion about, especially in the private equity area, where if you don't have the right people, you have to have the ability to change relatively quickly because it's other people's money, and so I would say that it all starts with people and all ends in people. To me,
Brian, on the flip sides, what's a leadership quality that you might not look for in somebody? Like, is it
Yeah,
integrity? What do you think?
Yeah, I mean, I love looking for humility. People who oftentimes will lead with their mistakes and the lessons that they've learned from those mistakes. So humility would be a big one. I think understanding people and leading people and understanding the weight of leading an organization. It's not just about how the company is doing from a profit loss statement on a quarterly basis. It's treating the people that are the asset of the organization with respect and making sure that they're feeling nurtured, encouraged, motivated to grow both personally and professionally at the firm that they're working for. There's just so many aspects to it that are really important. And then I think if you kind of dovetail all those together, it's a willingness to kind of look beyond yourself, right? It's not just about your own compensation and your own certain metrics. It's about understanding you're working for a larger cause. Your people, your clients, that's where the focus needs to be. And when you focus on those two things, you generally have good outcomes.
And to play off that, Tony, you said we were doing stuff that the world needs. It takes a lot of long-term thinking, long-term vision, like you're just alluding to. What advice do you have for the next generation to come?
Oh gosh, get involved, vote. You can do it. One of the things I worry about, and I talk to a lot of young people, is they think that there's so many problems that they can't solve any of them. My input would be find one and go after it. I came from a generation growing up in the 50s and the 60s where America was in a tumultuous time, and to be active and to pay attention and don't give up, because the world is a good place. But I find with the young people a certain amount of like incredible optimism but then a certain amount of fatalism around the complexities and the gravity of the problems that we face. There's always been great problems, and they've always been big. And don't allow the current rhetoric to get you down. You gotta vote. Please vote. And get everybody to vote. Have a voting party. Take the day off. Celebrate the fact that you can vote, and just become involved. There's a lot of good stuff going on. Keep your dauber up. Don't let anybody. Don't listen to all the news.
Well, I like that a lot, and obviously Be Bold is one of those. Right. Making all those calls, thousands. And just trying to make that point and just say, hey, we can make impact. We can deliver what the world needs through investment and private equity and everything else. So, Tony, 10 years later, we're talking to you. We want to know what your definition of a real leader is.
Oh. Well, you got to get up in the morning with a smile on your face, that's for sure, because you never know what you're gonna get when you walk in the office. But I think it's vision. It's caring. I think we care more here. I think it's tenacity. And I think it's fun. And I think it's a love of people. And I got to somehow in life was a good salesman when I was born. I think I have the word salesman across my forehead. I got to pick up the baton here as a conductor. And I got to lead these great people to drive, our organization, our families. We've had a lot of babies here. We've had a lot of stability here. And tenaciousness as an investment professional. I think tenaciousness as a CEO is one of the qualities that we might not talk about as much. But boy, you got to lockjaw down on this. And 10, 12 years of lockjaw before you come out is a long time to wait, right? But I think it's just what you do when you kind of know when to come out, right? I think we came out early before, and we were tenacious to keep at it, and we were convicted. That's another word I'd use: convicted, tenacious, caring, loving, and have some fun.
Yeah,
like a lot. And Brian, what about you? How do you define leadership?
Yeah, I think Tony hit on a lot of those things. We went through a management buyout where Tony and his wife sold a vast majority of the firm, kind of next generation of leadership at the firm. And over that last 2.5 years, you gain a real appreciation of just the responsibility of being an owner, of being a leader, and setting that example on a day-to-day basis of doing right by your clients and just ultimately focusing on them, and that'll lead to really great outcomes. So respecting the responsibility that comes with being a leader, being an owner, is critical in this industry, and really every industry.
So, Tony, in 10 years, where do you see the growth opportunities in impact investing?
Well, I think unfortunately, the growth opportunities are in the rest of the world. They're not in the United States yet, and that's a function of policy. I would like to believe that in 10 years, the entire world has a decarbonization policy, and they are beginning to implement it. It is happening in Europe. It's really, like I said, I was in London. They're decarbonizing. That means if you are a cabbie in London and you want to buy a new cab, it must be electric. They're putting charging stations on every corner. If you're a new house built, you can't hook up to the gas grid. They are serious about decarbonizing, and I actually believe it might be the one thing that will rally our country into the next generation of success. Because we can't really rally around anything else. And this decarbonization, if you're a mother, a grandfather, a child, you don't want to destroy Mother Earth. We need to nurture it. And so decarbonization would be my dream. California, 50% by 2030. England, 100% by 2030. So what we need to do in the United States is to be led by our European brethren to create policy that allows us to rally, and then the technologies that are going to come out of decarbonization, wireless charging. I mean, there are so many that we're looking at. Geothermal, which is a constant power source. The opportunities are incredible out there. It's just, we've got to get policy to decarbonize. And that's what, not only do I hope, I believe that if we don't, the risks are too great for my grandchildren.
And that's what I was going to say, and I'll pass this to you, Brian. Obviously, I wouldn't say obviously, but there is possibility that we can turn this around. We can change this. From you personally, though, from your opinion, do you believe this will happen?
Absolutely. I mean, you just look around, the opportunities are everywhere. And I have 3 of those young children that I think about their future that, we have to solve for. But this nation and this world, the technological advances that we've made, we're not even scratching the surface on how we can change things and make a big impact in the world. We need to shift some of that tech focus to those people who are focused on kind of changing outcomes and changing the world in a very positive way. But it's definitely achievable, and I think we will, as a nation and as a world, really kind of come up with these solutions. But the opportunities to make money and do good in this world are really abundant.
And is this going to be done through the private markets, or is this going to be, do you think, a collaboration of both?
The way to get there is through the private markets, but without policy, it ain't going to work.
Yeah.
What we ought to be doing, they make fun of the new Democrats in the more the green. I mean, that's the thing to be done. We should be adopting a decarbonization policy as soon as quickly, and we should have all the incentives from our leaders in our government to implement a faster transition, because the risks of excessive carbon over the next 10 or 12 years, you will not be able to fly into LaGuardia, Kennedy, Logan. We'll be gone.
Yeah.
The entire eastern seaboard rail line will be underwater. The damage to just global warming and no ice is trillions, and we're not even talking about it. We're talking about crazy, goofy stuff in Washington.
Right.
We need leadership.
Yeah.
We need vision, and I hope to God it isn't forced on us. That is, Mother Nature revolts,
Right.
and we have to scramble.
Yeah.
And we could go on for days about the
Yeah.
world's biggest problems. I mean, I'd love to do that another time. But I just want to say, gentlemen, thank you so much for your time today.
Oh, you bet.
We talked about the story, talked about the E, the S, the G, and wrapped it up with leadership advice and what a real leader is. So I appreciate your time coming on the 72nd episode of the Real Leaders Podcast, and best of luck going forward.
Great.
Thank
Thanks
you
for
so
having
much.
us.
All right.